Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact your stock and bond portfolios. I'm Scott Nasca, President of Generation Capital Management. In a mixed market last week, as the Dow Jones was up 0.1%, S&P was down 0.2%, and Nasdaq was down 0.4%. Not much move in all of the major markets for the week if you look at it in terms of totality. A lot of inter-day swings, but when you add it up for the 5 days, pretty much came out pretty benign. On the bond market side, we have the 2-year at 5.08, 10-year at 4.36. So we have a 72 basis point inversion that continues to be in place for almost 18 months right now, and with the shorter end of the yield curve at higher levels than the longer end. Fed controls the short end as they're doing with their interest rate policies. The longer end tends to be more driven by economic conditions, but still an inverted curve, which usually leads to economic slowdowns and recession. So keep an eye out on that. It's a number that we've been talking about for many months now and many sessions. So you just want to pay attention to that. I also want to throw a couple commodity prices out there that we've started to provide. Oil's at 91.83 right now, and gold's at 19.45. We've seen a big move in oil prices over the past 3 months, up over 25%. Big move. You're seeing that if you're, paying at the pump, gasoline prices are higher, heating prices are higher. Not a good condition for one who's looking to try and stem inflation when you see energy prices the way that they are. We have a lot of data points coming out this week. We have housing starts on Tuesday, jobless claims on Thursday, and we have existing home sales coming out on Friday. We also do have Federal Reserve interest rate decision that's coming out on Wednesday, and then their press conference that comes out after. Pay very close attention to that. Right now, the consensus is that there's going to be a pause at this upcoming meeting, but you want to see for the next meeting if there's any indications for increased rates. I think they're going to continue to read the data points that's coming out, probably keep their foot neutral right now, but will be aggressive in raising rates more if they continue to see inflation as a problem. And you also want to see the press conference after, where you have the Fed chair, answering questions that are out there from the different journalists, and see if he can provide any more details in terms of their views of economic conditions, the inflation environment, and how it impacts interest rates. If you have any questions, feel free to reach out to us, www.gencapmgmt.com. Team is ready to answer any questions that you might have. If your portfolio is a second opinion, make sure that your allocations are aligned with your goals and objectives and your overall risk tolerances. Take a look at our site. We have a lot of good financial planning updates with John's top tips. There might be something that might spur something that you should be doing when looking at your finances. Feel free to reach out to us. We're glad to help any way we can. My name is Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.